Good morning, everyone. Well, I'm pleased to welcome our panel today, Street Talk. First panelist is Jake Fuller, Senior Managing Director at Guggenheim Partners, Mark Mahaney, Managing Director at RBC Capital Markets, Eric Sheridan, Managing Director at UBS, and Lloyd Walmsley, Director at Deutsche Bank Securities. Gentlemen, welcome to the stage.
Thank you.
Well, it's a pleasure to sit down with all four of you. Over the last couple of days, we have been discussing the disruptive forces in the online travel sector. Now we have the top Wall Street analysts here who cover these companies day in and day out to give us their assessment of where these stocks are headed and how some of these companies are trying to achieve commendable growth rates at a time when there are a lot of competitive factors at play. This past earnings season, the industry has long known, Mark, about the ambitions of Google in the online travel space, but it seems like this earnings season, we really got to see the pain that Google is starting to inflict on earnings for some of these large online travel operators like Expedia, TripAdvisor, Booking to an extent. What did you make of the move in these big stocks?
So there was a term called the Google squeeze, and it was referring to the decreasing percentage of traffic that the leading online travel agencies could get from SEO free traffic channels. So as anybody who's searched on Google over the last decade has known, those free links at the top just keep getting crowded down. And if you are dependent on those free links for traffic, it's an issue for you. So that's come up in part, most clearly, as Seema, as you just said, for TripAdvisor and for Expedia. I don't think that's going to reverse. I think the way I've phrased it is there's no more Google free lunch. And so if you have a strategy of building a business based on organic search, you're in trouble. That doesn't mean that Google is going to go directly compete in travel. I don't think they ever want to. I don't think for regulatory reasons they could. But they're going to try to extract more of the economics of travel. They're going to make you at the end pay more for the lead. And by the way, I don't think it's a worse consumer experience, it's a better one. So you better know how to work paid Google marketing channels and social media channels and get people to come to your site directly if you want to generate real profits in travel going forward. So that's the so what.
Pretty sharp reaction in these stocks. Just in the month of November, TripAdvisor is down 14%, Booking is down 9%, and Expedia is down nearly 30%. Are these moves warranted is a question?
Yeah, the moves are pretty severe. We don't think they're warranted, but following up on Mark's comments, we've seen this before vis-a-vis TripAdvisor. Where it's newer is having Expedia specifically call this out as a headwind, and I think that really spooked investors, but I think the reactions are overdone.
Do you agree, Eric?
Well, I think it's interesting. The industry's going through one of the most difficult transitions a stock can go through. It's going from a growth industry to a more mature industry. So you almost have to cycle through growth investors into more mature, sort of value-based investors. And that's a tricky transition. So these companies used to grow 20, 30, 40%. Now they're growing 10, and they have to reinvest back in their businesses in a way that, isn't driving the same returns they had before. That's what we're really seeing in terms of the volatility in the stocks.
Jake, what do you make of the shift from growth to mature? Are the good days over?
So we've seen this before, first of all. I'd say there's nothing broken here, right? We're talking about a couple of points of your SEO-related room night volume probably went to paid. Yeah, that's not great, but it's not a broken business. And we've been through this with these companies before. Still a very viable business, still very healthy growth profile.
Mark, why was Booking able to offset the Google challenge versus some of the other online travel operators? What is it about Booking's sheer size and scale that helped it outperform this quarter versus its peers?
I think the irony here is that because Booking didn't have the brand build-up that Expedia and TripAdvisor had, it never developed the dependency on organic search that Expedia and TripAdvisor did. So therefore, it always built up the muscle memory, if you will, for paid search, and it's come through for them pretty well. I do want to amplify something that Jake just said. Look, the growth rates here are extremely consistent. We're year, 2 years, Expedia's top line growth is pretty much unchanged. It's been 9 to 12% or something like that. Booking is done 11%. And by the way, this is kind of a weak global travel market. There's so many winds. They're political, there's unrest, there's currency, and they're weak economies. I think that tells you that if those two companies can sustain kind of high single digit, low double digits in this environment, they probably can improve on that in the next year or two as overall global travel markets usually are going to revert to mean, and people will start traveling more globally.
And let's keep perspective here as well, right? So the biggest hotel chains, Marriott, Hilton together, they're growing room nights 7%. Here we're talking about 11%. This is still a business with some secular tailwind behind it.
Jake, what do you make of Booking's international footprint? Does it help the company thrive or actually make it more vulnerable to these macro factors like trade and geopolitics?
So I think because they are so geographically diverse, they're not exposed to any one individual market when things are going south. But when you think about footprint, we heard Glenn talk about breadth and how important breadth is to their business. One of the biggest drivers of your growth in this space has always been expanding your breadth. And one of the things we're seeing here that's changed in the growth algorithm, while they are still showing healthy growth rates, that supply footprint's not growing anymore. Most of the traditional hotels in the world are wired, so the days of that 20% plus growth are certainly behind us, but 10, it's not bad.
Lloyd, do you have a top pick in this space?
Yeah, our favorite name is Booking.com. We think they have the best asset mix in terms of positioning globally, especially in Asia, best execution, very strong management team. So that's our top 9.
Well, I'll go the other way then. We actually just reiterated our buy in Expedia. We think the sell-off post this set of results was quite pronounced, down 25%. I think they do have an interesting collection of assets that's pretty much being undervalued by the market right now.
Let's pivot the discussion to Airbnb. We've been discussing the role it's playing in all the alternative accommodation space. In a way, do you think the market is more prepared for the Airbnb story as they gear up for an IPO or a direct listing in 2020 because the online travel operators like Booking and Expedia already have alternative accommodation businesses?
I could jump in there. I think it's an area that is already attracting a lot of investor interest. We actually put out a report a couple of times a year tracking the trends in shared accommodations. It's very well read. It's tracked by investors. It's a component of growth of the publicly traded companies, even though it's not pure growth for them. It's buried inside a much larger entity. And look, investors are always looking for new, interesting, innovative growth companies to invest in. So in whatever form their listing might take, I'm sure it's going to garner a lot of attention.
Mark, we're not expecting the Airbnb IPO, or listing, I should say, till I think mid-2020, but still, how are you sort of seeing this new player impacting the OTA space?
So we don't have a formal opinion on whether this would be something investable or not. Don't get me in trouble. But I think that it's an objectively true statement that I think there's a lot of interest in it. It's a well-known brand. They have a lot of cash. They're break even, and they've had a few years of generating profits, small free cash flow and EBITDA, which is in stark contrast to some of the IPOs that we've seen over the last year or so. I think one can say that there's going to be a lot of interest in it. It's perceived as, whether it's true or not, it's perceived as one of the big disruptors in the space. I think my guess is that a year from now when we do this, that thing will be public.
Yeah, I'd take a totally different tack here, right? I think Uber and Lyft going public, the WeWork debacle has really changed the world, right? And changed the public market's perception. What we value is going to be very different moving forward. And I think Airbnb has a much more managed growth profile than we've seen from some of those IPOs that did not work. And I think that will stand out to the market. Probably we'll see if they're profitable, but closer to profitability, growing 30, 40%, I think is a much more amenable scenario for the market in this environment.
I would agree with that. I think there's definitely been a shift in investor appetite. You started this year with sort of a growth at all cost mentality in terms of what was coming public and what people wanted to talk about. There's been a clear shift towards what's the path to profitability. Even at more moderate growth levels, people would take the trade-off to the path to profitability over hypergrowth.
Yeah, and I think Airbnb is in a good spot in the sense that they're still growing considerably faster than the rest of online travel, and they're profitable on an EBITDA basis. And so, I think that's a good profile, even with what we've seen in the markets that these guys have pointed out, which is, a clear focus on profitability and sustainable unit economics to make an IPO kind of attractive to investors.
But what about the fact that there are competing forces and other players in the vacation space now, alternative accommodation space?
So I still think we're in a world where they aren't butting heads directly, right? We have a Vrbo, I won't say VRBO. In the vacation rental U.S. destination, we have Booking, which has managed properties in Europe, and we have Airbnb with much more private accommodation type. Over time, they're going to converge and compete more directly, but I'm not convinced right now they're competing directly head-to-head, and it's a one-for-one share game.
Eric, any thoughts on Airbnb's experiences business, which they've been putting more money towards and building out?
Well, this is going to be a huge area of growth for online travel broadly. Owning more wallet share of the trip, owning more of the customer experiences when they're on a trip. So we saw some interesting private companies here at the conference over the last 2 days that are focused on local and experiences. Airbnb is not the only one going into this space. Glenn Fogel at Booking talks about it. Mark just talked about their interest in this space at Expedia. So I think it is an interesting space in that inventory is not really concentrated. So it's going to take a long time to garner enough inventory to have scale and experiences, but everyone's going after this for both growth and for the customer relationship.
Wasn't this essentially TripAdvisor's business, experiences and tours, and now others are getting into it, essentially?
That was part of the investment thesis behind TripAdvisor, and I think it still is. And just to amplify Eric's point too, experiences is kind of the final frontier. It is a very hard business to wrap up and to consolidate because the supply is so unconsolidated, it's so diverse. So it's a difficult business to wire up, but if somebody can do that and really create the connected trip, I mean, maybe that's the big trend. Maybe that's the new theme in online travel. It's been building for years, but the idea that somebody can put together that entire trip, the flight, the rental car, and the experiences. I don't know if anybody's doing it really well yet, but whoever does that is probably going to create the most value.
Jake, you mentioned the mixed performance of IPOs so far in 2019. You look at Uber and Lyft trading about a third. They have dropped more than a third since going public. WeWork scrapped its IPO completely. Does this tell us that as we await Airbnb in 2020, that private companies are having a hard time standing up to the scrutiny of public markets?
Well, so we talked a lot yesterday in the conference about being awash with private capital. So number one, I think private capital is going to start to dry up, and that's going to change the behavior of the private companies, right? They were behaving given the way they were given the capital that was flowing to them. And as that dries up, I think we'll see a much more disciplined approach, and that'll prep them for the public market.
Lloyd, what do you make of the broader IPO market?
Yeah, look, I think it's changed. It's clearly changed. I mean, when Uber and Lyft came out, they were losing extraordinary amounts of money, things that the public markets had never seen. In the case of those two companies, they are ramping towards profitability considerably faster, I think, than most people expected. And even despite that, the stocks have been really, really under pressure. And so, the appetite is really for profitable companies now. So it will change the profile of who comes to market.
We go through capital cycles the same way we go through market cycles. The San Francisco, the Valley, globally was awash with capital, chasing sort of private companies and long-tailed growth for a number of years. Interestingly, when we were on this panel last year, it was sort of coming to an end. A lot of the private rounds were down rounds, and there was a lot of talk at this conference a year ago that the private side was coming to an end. I think the IPOs you've seen this year have been the exit strategy as the private side came under more pressure and capital became more constrained. Now we'll also go through how the market cycle feels, both the macroeconomic cycle. A lot of these companies have never been through a recession. That's going to be a big open question for all these companies over the next 2 to 5 years. And they'll all be tested by the public markets. They have to answer questions from folks like us on a quarter-to-quarter basis, and that's a different level of scrutiny than they're used to also.
Why is such a hard story to understand, Mark? How many people use Uber and Lyft? I mean, it's pretty much everyone, yet they still can't figure out their path to profitability. Perhaps Lyft is getting there, but...
I think they will. Actually, just to throw out a stock idea, actually Uber is one of my favorite ideas right here. There's this acronym FANG, Facebook, Amazon, Netflix, Google. I think it should be FANG U. Put Uber in there. They've heard the street, they've heard the public markets. They are now consistently going to bring down their operating losses. This is a company that's got good unit economics, at least in the ride-sharing part of the business, just as good, if not even better than what you've had in the OTA business. And then you've got this guy Dara, who most of people here will know from all of his travel days, buying stock earlier this year I think the bottom is in on the stock. I think there's maximum hate or fear about the stock, and that's when you make the most money, buying a good asset that's dislocated. I really like Uber here.
Question from the floor, and to add to Mark's comment about the interconnected trip as well, and several other leaders spoke about it. Why do you think the time is now or in the near future for that to eventually happen? Because a whole lot of these brands have been one-stop shop for a while. And in the midterm, are you bullish or bearish about this concept of interconnected trip?
So I would jump in and say bearish, probably unpopular, but I don't think the consumer is necessarily ready for it, and I think that's been part of the problem historically. It was very hard to get people to buy both a plane ticket and a hotel room, and now we're talking about buying a hotel room, a plane ticket, a car rental, an experience. I'm just not sure the customer's ready.
I'll jump in as well. I would just echo the words last year from Steve Hafner, who said, when you're growing 40%, you don't mess with something, you stay single product. When your growth slows, you have to integrate. And I think this is a reflection that the growth in the industry, the opportunity is slowing down, and the companies are looking to focus more on profitability. Doing a connected trip drives more loyalty, less Google dependence, and I think that is the driving factor behind this. I would also add, on Jake's comments, I think it's hard. I think getting a consumer who books 2 trips a year on average, servicing them like a traditional travel agent is borderline unrealistic for someone who doesn't travel that much. I mean, there's just not that much of an opportunity to integrate everything.
Well,
Bull or bear?
Yeah, I'll just bring it back to the earlier question from before. Think about the way in which you're sourcing your growth. You either have to have a direct relationship with the customer, in which case you want to sell them the most amount of things possible, improve conversion, or you're going to pay for that traffic from Google. And if you're going to pay for it, you're going to want the wallet share against your embedded cost to be as large as possible. So I think the shift is just an output of all of that.
Back to ride hailing. Just go down the row here. Lyft versus Uber. Would you rather?
Uber.
Uber. Eric?
I don't cover Uber, so I'll say Lyft. And the reason I'll say it, though I think which is applicable across, is I think the U.S. ride-sharing space is very quickly turning into a duopoly by necessity, and I'd like to own the stock that's singularly exposed to that theme.
Mark says Uber.
So I'll say 2 things. I'll say, number one, in the short term, I prefer Lyft because it's cleaner, easier, and simpler. But over the longer term, I've watched Expedia and Booking and how that unfolded over decades. I've been doing this too long. And I think we'll end up having the same thing here, too. I think you get a premium valuation for the market leader, and I think Uber will be that over time, but just easier with Lyft up front.
What about the fact that Lyft doesn't have that international presence that Uber does have?
Yeah, well, that's what makes it easier in the short term, right? Because it's very clear what's happening here in the U.S. The competition has really mitigated. We're seeing this significant leverage to that. They're going to be able to get to profitability much sooner. Now, over time, not having that international exposure will be a negative, but short term, good.
Mark, what do you make of Uber Eats? There's been an active discussion around these food delivery companies. SoftBank-backed DoorDash just got valued at $14 billion in its latest round. It's been certainly an area that has been getting a lot of attention of Wall Street.
I'm actually struck, I hadn't thought of the idea, but there should be somebody in biz dev at Booking and Expedia should be talking with somebody in biz dev at Uber about setting up some sort of global partnership. You want the connected trip, you fly, maybe you get a rental car, but increasingly, why not just hook them right up? Somebody gets off a flight from Expedia or Booking, hook them right into Uber. I wonder if anybody out there is working on it. It probably happened last night. And then Uber Eats, I don't know. This is what I call the food fight business, and it's just been massive losses, and I think it needs rationalization. It needs people to cut back on incentives. I think that'll happen. It happened in ride sharing, but timing it is very hard. So that's the big investor question over Uber. What can they do about this big loss-generating business called Uber Eats? The one advantage that Uber has is if it doesn't work out, they can sell it. And so I think investors can win either way. It'll either rationalize or it won't, and they'll sell it. The stock goes up either way.
Weren't we talking about Rundles or something like that yesterday? They have the opportunity to create something like that, right? So you get that customer in the door through the ride-hail business, and you've got other things that you add on to it, and that creates value over time.
I want to ask the panel to express their views on China and what it means for the travel space. And Jake, I'll start with you.
So I've covered C-Trip or Trip Group for a while now. hard to tell sitting where we sit, right? I mean, clearly there's a lot going on there, very difficult to assess the underlying trajectory of the business. Obviously, it's going to be hugely important to the world over the next 2 decades, big source of outbound travel, but short term, really tough to get a beat on what's happening there.
Mark?
This should be the largest global outbound travel market. It's on a path to be, or it's darn close to be. This was the first year, however, in which China outbound travel was flat or down year over year. I think that points to a lot of currency issues, political issues. I am sure that that's part of it. It's hard to quantify that, but I'm sure there's part of that. And then unrest in places like Hong Kong. So it just tells me that what we're seeing near term is probably not the right long-term read. We're seeing depressed demand, but my guess is that that demand comes back because there's a surging middle class of 300 million people in China, and those people want to travel, and whoever can sell to that market, that's a huge market opportunity.
Eric, big opportunity?
It is. I think you have to separate it as Mark and Jake did. I think Chinese companies will always own the market share in China. That's one thing I've learned in 20 years of doing this.
Look at Didi.
Yeah, a U.S. company will not be successful in China. That's not going to happen, period. So I think there's an outbound opportunity. And I do think there's an opportunity in areas adjacent to China. But right now, in the industry conversations we have every quarter, Southeast Asia is probably the most hotly contested, competitive market where no one's really earning a return right now. So I think you need competitive intensity to die down. And I don't cover C-Trip, but they certainly are now making a lot more noise about wanting to be a global player, being rebranded as Trip.com, striking an agreement to take a 5% stake in TripAdvisor. I think I would watch their ambitions globally and how it could unhinge or sort of worsen the competitive intensity from a global scale as opposed to just a regional scale going forward.
Lloyd.
Yeah, echoing what these guys have said, when you look at the Chinese passport data,
Right.
the number of Chinese citizens getting passports to travel internationally continues to go up at very healthy clip. It's a huge middle class that will want to travel and has been a good outbound market for booking and probably will continue to be as the economy there perhaps stabilizes with an eventual trade deal. I think looking at what C-Trip or Trip.com now is doing, they struck this deal with TripAdvisor. They're now going to get a lot of content that they can use, including on Skyscanner. So I think we've started to see them showing up at vacation rental conferences, looking to build direct supply relationships, even in vacation rentals in the U.S. So clearly, those guys are coming west, and will be very interesting to watch. That's you look at businesses like Trivago and TripAdvisor, and one of the biggest problems in their business is having only 2 bidders in their auctions. You get C-Trip coming into these markets, contesting in these auctions. It could be great for those businesses. So that's another angle to watch coming out of China.
Beyond China, alternative accommodations and Airbnb, you guys covered the biggest companies in the travel space. We have a lot of startups and entrepreneurs who are presenting their ideas, their disruptive ideas. What do you think is the most exciting thing that's about to hit the travel space?
And we kind of hit this different ways every year here. It's really hard to be a startup in the travel space. It's really hard to compete against, $9 or $10 billion of marketing from the likes of Expedia and Booking. And I tend to think when a good idea comes up, it's easier for them to co-opt, right? So I think it's really hard.
It's hard. Okay, that's motivational. Mark.
I think that connected trip is a great theme. I think if you're a small business, I think you've got a couple of companies here that are building up very large cash piles that are looking for new sources of growth because they want to feed the growth beast. And so they'll be looking to do acquisitions. And so I think if you're building up a small business or building up a business, especially in the connected travel, local experiences, adventures place, you've got more opportunities to exit. You got more buyers for your business now than you had 5 years ago. It should be very attractive for you.
So I'll take a little different tack. We started with Google, but we did not talk about Amazon or Facebook. Amazon, I don't think, has ever given up on an idea that they would play some role in the travel industry over the long term. It's a tough industry to break into, but Amazon does not lack for incentive of wanting more the wallet share and the relationship with the consumer.
Lloyd, your idea.
All right, it's somewhat depressing, but I think what Google's doing in travel is really interesting, and what they're investing in AI and machine learning is getting their product to a level that is very difficult to compete with. We've talked about it as an idea for years now, and you're actually seeing them use all of their data to finally better merchandise things to you. And I think the end state of that could be very interesting.
Story is certainly not over. Lloyd, Eric, Mark, and Jake, thank you for your time today.
Thank you.
Thanks,
Thank you.
Seema.
I used to book my hotel room on those travel sites, but there was always a catch. Like somehow you'd wind up getting less. But now I book at Hilton.com and I get all these great perks. I got to select my room from the floor plan.
Very nice.
I know, I'm good at picking stuff. Free Wi-Fi, laptop by the pool is a bold choice, and the price match guarantee.
How do you know all this? You like some magical Hilton fairy?
It's just here on the Hilton app. Just available to the public, so. Book at Hilton.com and get the Hilton price match guarantee. If you find a lower rate, we match it and give you 25% off that stay.